With the Bar Hill Group at Remax Camosun, host of Vancouver Island Time, and today I'm here with...
Hi, everybody. It's Andrew Plank with Royal LePage. We're co-hosting He Said, She Said, They Said today. We have a special guest today, Liz Prins from Mortgage. Help me out, Jane. Who's she with?
She is with Mortgage Designers at Mortgage Architects.
Okay. I was going to say
Mortgages by Liz.
Yes. Excellent. Excellent.
What was that thing that just flew in the background there, by the way? Are you playing with your cat?
It's almost like, you know, when you have a baby and you just like, if you pick up a baby and you just automatically like sort of rock or cradle it. God. It's like, now I've got this little thing. I've just got to like be shaking it away. I'm just trying to get Kitty's attention. Anyway.
Okay. So much for professionalism. Let's start again. Good morning, everybody.
Oh. Hi, everyone. Welcome to He Said, She Said, They Said, a real conversation in real estate. You've got with you today Andrew Plank with Royal LePage and Jane Johnston of Remax Camosun. Our special guest, Liz Prins with Mortgage Designers, Mortgage Architects, will be talking to us later after we've gone through the stats. Thanks so much for joining us.
Okay, fix your glasses. Yeah. All right. How was your week?
I just want to say that Jane is really, really bossy. Like, fix your glasses. We're going on in 5 seconds. Get ready. Stop it. Don't make noise. It's a lot of fun doing this work with her.
Okay.
Be serious, so I'm sorry.
All right. So actually today we're going to be talking just about interest rates and figuring out what's going on for buyers and sellers. The reason for that is, everybody's wondering. They were on pins and needles. We've heard about inflation happening. So Liz is going to give us some insight into that. But first, let's do the stats. And I'm going to share my screen here. All righty. Can you see it? All right. So for a couple of weeks there, we were lower pendings compared to listings. But last week, it's been 151 new listings, 166 pending. So we're back to what we were before Christmas. Price decreases 8, price increase 9, back on market 4, and sold 187. So how have you been finding this, Andrew?
Well, I'm seeing a little more inventory coming online, but it is also moving fast. There's high competition for it. Been having some interesting conversations with clients around strategy and timing. A lot of people are really honestly sick of making competing offers and getting tired of it. And it's hard to coach them to continue to be patient because, you and I both know that every year there's a new season of spring market of properties coming in and more inventory. And there should be some more selection, all things being equal. That being said, when we look at these stats, Jane, 151 new listings came on, but 166 came off. So still we have more selling than listing. The last couple of weeks were good to see. I think we'll start to see some more of this again in the future, but this week definitely less inventory.
Yeah, so not to be facetious, but I do use the word patience, grasshopper, the phrase, because I really think people need to realize, I think they're just frustrated because they want to take the leap now and they can't take the leap.
Well, and the patience grasshopper, most of the time is really, really good advice. And in fact, in any market, it can be really good advice. It's been frustrating to watch that advice sometimes fall horribly with people who do wait and watch the market continue to go up and up. So, this is one of the things we're going to be talking about today is, we can't predict what the future will hold, but we can kind of look at some of the signs and maybe come up with some ideas of what might be happening in the future, so we can at least know what are the probabilities of something happening.
So I had a client on the weekend who's thinking about selling and buying another property, buying a home, selling a condo. And I'm like, well, first of all, you have to make sure you're qualified to purchase, because I think right now you might be wanting to sell before you're qualified to purchase. And they hadn't really considered that, but so important. And so what that means is that you can be supporting yourself with your current mortgage, but if you can't support yourself in the new mortgage, or if you're changing your job or you're buying something like a new truck, you may put yourself out of contention. So we don't want to move you out of your place before you can buy your new place. And I was saying that you really need to keep a toehold in the market, because there's a ratio of price from what your condo is worth to what a house is worth, and what the townhouse is worth compared to a house. And so if you leave the market, sometimes the market can go up without you, right?
Yeah, and I've seen people be really successful buying first before selling, but they need to really be comfortable or able to hold the two mortgages if that's something that's a risk, or get a long closing and hope that you can sell your home in time afterwards. But with the market going up, I've seen people actually help to make that gap less if they're moving up in the real estate marketplace by buying first and then selling a home a month or two later that's worth proportionally more money less at the time.
That's a risky proposition, everybody.
There's risk involved, and it needs to be discussed. Yes, the market could change. Your home might not sell, and as Jane was alluding to, you may not be able to qualify for holding two homes if your home doesn't sell, or there might be a problem discovered in your home after you've bought the other home that makes your home really difficult to sell and worth less.
Okay, so let's finish these market stats here. Do you want to do the second half?
Yeah, I'll take the second half. So for sure. So in the last week in the Victoria Real Estate Board, wow, it's Monday, January 31st. Oh my gosh. Okay. So here we are at the end of the month of January. And in January 2022, we've had 437 unconditional sales. Whereas last year, by end of month, we had 646 unconditional sales. 661 new listings in January 2022 versus 911, that is, in last year. And then active listings, we are almost, we're a little more than half, but we're still like round figures, 755 versus 1,321. Really, really low inventory. I listed a home the other day. My client said, "How many listings do you have?" And I said, "Well, your listing is the one that I've got coming. I've got more coming, in the pipeline." But if you look at those numbers, we've got over 1,400 realtors, and on average, then there's about a half a listing per realtor in the marketplace right now.
Yeah, I've sold one listing this year so far. One sale.
Yeah.
Okay, without further ado, let's welcome Liz, and let's talk about why you want to get qualified, what's happening with the interest rates. Everyone's really afraid right now. They're trying to figure out how to manage their money in this market. And then let's just find out the skinny on what's happening in the mortgage world. Good morning.
Good morning.
Hi,
Happy
Liz.
Monday.
Happy Monday. We're not usually this silly. Andrew's playing it up.
That's not what I heard. Rumor has it.
So-
Jane, we have an overlay on Liz's
Yeah, I just noticed
name
that.
and stuff. Let's just change that so that people can see her name. And yes, there we are.
Thank you.
Okay, so one of the reasons why we contacted you, Liz, is because people are wondering. Everyone was on pins and needles about the announcements regarding the interest rates. And I'm just wondering what you are hearing from your end of the world.
Okay. Well, I'm certainly getting a lot of phone calls and emails and text messages asking me what's going on with rates. So the Bank of Canada meets 8 times a year, and they look at what's happening with Canada's economy and do they need to encourage spending or discourage spending? And then they set their overnight lending rate accordingly. When they make an adjustment to their overnight lending rate, the big banks follow suit and adjust their prime lending rate the same amount. I talk with my hands a lot, and I'm not even Italian. And so there's been talk about prime going up or the Bank of Canada raising rates anywhere from 3 to 8 times. Okay, deep breath, don't panic. Right now, the prime lending rate is 2.45. And prime lending rate is linked to your variable rate mortgage. It's not linked to fixed rate mortgages. It's just variable rate mortgages and lines of credit. So right now I can get a variable rate of prime minus 1%. So current interest rate is 1.45. If the Bank of Canada raises rates by 0.25%, well, you're up to 1.7. 1.7. And so, which is still an incredibly low rate. If the Bank of Canada raises rates 4 times, well, you're only up 1%. So instead of 1.45, your rate is 2.45, which is still incredibly low. Fixed rates are a little bit higher. So fixed rates have been crawling up a little bit. So I can get probably mid to high twos. And so they're not even that high. Before COVID hit, fixed rates were in the low to mid threes. Those were normal interest rates. And so people have to keep perspective. We've been celebrating record low rates for the last couple of years. They're not going to last.
And you're saying that these rates are actually related to COVID as well. I mean, they're part of the stimulus or, yeah.
Mm-hmm.
Yeah.
But, you know, when we went in 2008, we had a recession, and it took 10 years for prime to return to post-recession levels. So in Canada, we're very cautious. We're very conservative in a good way. Mm-hmm. And so when they make adjustments to their overnight lending rate, it's going to be small baby steps. They're going to raise it and then watch what's happening with the economy. They're not going to raise rates 2%. Oh my goodness. Can you imagine? People would lose their homes if they raise rates 4%. Mm-hmm. It's just too drastic, and we're too conservative for that.
Andrew, did you have a question?
Well, I understand. I'm not sure if this is Canada or the U.S. or sort of both, but they try to keep the rate of inflation around 2% on average. I think that's Canada. And so we've had, a lot in the news about inflation and, inflation sort of coming in. And so I think that's maybe why there's a little bit more concern about interest rates rising is the bank having to make some adjustments to stay within their mandate of keeping it to 2%.
Yes. So they didn't change this past week. Surprisingly so. Everyone did expect it to go up. So I think with the next meeting, they'll raise maybe 1/4 or maybe even 0.5%, but it won't be a huge increase.
Right.
So let's just talk about gross debt service ratio and qualifications. I mean, one of the things that people have to do is qualify for the financing. Yes. So the qualifying limit is higher than what the current rate of interest rate is anyway, just so that there's a buffer there for a buyer. So can you explain to everybody what that means?
Yeah, so even if your interest rate is less than 2%, we have to stress test the application. So we have to use an interest rate of 5.25, and we have to calculate what percentage of your income we're using for your monthly heat cost, property tax installment payment, mortgage payment, and strata fees if applicable. And we have to use less than 39 to 44. It depends on the scenario, but we have to use less than a certain percentage based on a calculation using 5.25. So the benchmark rate is actually the average of the big banks' 5 posted rates. So when we're talking about all these rates increasing and what's going to happen, the stress test is still the same. It's still 5.25. So qualifying isn't affected.
Interesting.
Do you find that most people are focused on the rate rather than the terms and conditions? Like, I think a lot of people maybe lock into a fixed term or a fixed rate, rather than variable, and they don't realize what the penalty is. And most people move before their mortgage is up. So what are your thoughts on that?
My job as a mortgage broker, what I think my job is to educate people. because educated people make educated decisions. And I'm always looking long-term, what's best for the client. And as we all know, life happens. And so 3 out of 5 times mortgages end early. No one goes into a mortgage thinking, woohoo, I'm going to get this mortgage. I'm going to pay it off early and have a penalty. Nobody thinks that. But 3 out of 5 times we have to redo their mortgage. They're moving, they're debt consolidating, they're redoing their mortgage to get a lower rate, whatever. There's lots of reasons why it happens. And when we look at variable rate mortgages, the early payout penalty is always 3 months interest. 3 months interest. That's it. It's low. So I'm a big fan of variable rate mortgages. With fixed rate mortgages, your interest, your early payout penalty is the greater of 3 months interest or the interest rate differential. What that means is when you start your fixed rate mortgage, the lender knows we're going to make this much money in interest from the client over the next 5 years, 4 years, however long your term is. Big banks use their high posted rates to do that calculation. A mortgage company called a monoline lender uses their fully discounted rate to do the penalty. So, those penalties of $30,000, $40,000 we read about in the press or see on Facebook, those are bank fixed rate mortgages. So I'm not bashing banks. I'm just saying that's how it works with penalties. So I'm a big fan of the variable rate mortgages. In fact, I have a variable rate mortgage. I've redone my own mortgage 3 times in the last 2 years because I was at a rate, penalty was 3 months interest. Well, the new variable rate was lower. I did the math, it worked out. Then variable rates dropped again. I did the math, paid the penalty, and I'm in a new mortgage. So another way I took advantage of the low rates is I set my payment higher as if I was in a fixed rate mortgage.
Yeah.
And wow, I can't believe how quickly my mortgage balance is coming down.
And do you recommend that when people are borrowing that they do a what's it called? Every 2 weeks, as opposed to twice a month or once a month?
Oh, yeah.
Accelerated biweekly.
So what I recommend is we look at people's budget and how their paydays are set up. So if you split your monthly payment into 2, if you get paid biweekly, then you're making basically an extra month of payments during the year. But if you get paid the 1st and 15th, well, that, I don't know about you, but that's a pain trying to figure out, okay, I gotta have this much money in because the payment comes out every 2 weeks. So what we do is we just increase their payment so it has the same effect over the year. So we play it by year.
Okay. Yeah.
Do you think that, like, if interest rates do go up 0.25%, to me, Andrew, what do you think about this? To me, buyers will panic anyway. Sellers will panic as well, just because there's a change. It's always just the change.
Yeah.
It doesn't mean it's.
Well, no. So I see this. I've seen this repeatedly over the course of the arc of our time in real estate, and that is, whenever there's some sort of impact that changes things perceptually, there's an immediate reaction of let's hold off and see what happens, and then people get back to doing business as usual. And so unless there's a major effect, so let's say COVID, we thought that when COVID struck that everything was going to be a hell in a handbasket for the next, we're talking real estate market wise, for the next, foreseeable future.
Yeah.
And for 2 months or so, everything was dead in the water. Nothing was moving as people were trying to, were scared. But then people got on with their lives and more so, and then it just took off. When I've seen interest rate rises or any kind of change in legislation, I see an immediate pause, and then I see people come back saying, okay, the sky didn't fall. Let's get on with our lives.
I think while they're pausing, they're phoning their mortgage broker. because when there's any change, it gets busy. It gets busy. It's good though, right? I'm glad people are reaching out and saying, okay, what does this mean? So
I want to circle back, Liz, to something you're talking about and alluding to while you're describing the rate at which people get qualified. And so that everybody understands that means that the reason for that is that qualification is based on what banks sort of believe you should be able to afford. And so if you qualify at that rate, you should be able to actually carry a mortgage at 5.45% or whatever it is you're getting qualified at. So interest rates would have to come up quite a bit. I mean, you still have to obviously tighten your belt and change some of your spending, but you can carry a mortgage according to traditional ways of measuring affordability up to 5 point whatever it is that you've been qualified at, and that's quite a big difference.
5.25. But you know, I always recommend that people don't max out, right? Because what if one of them loses their job? What if they decide one goes back to school to get their master's? They have a baby. So I always recommend people look at their household budget as well, because they know their lifestyle. You know, maybe they're big travelers. Well, in the old world, but maybe they eat in restaurants a lot or whatever, and they know their cost of living best. So regardless, I think it's important to be conservative, but you're right. You know, the qualification is based on a rate that's over double.
Yeah. What he's saying is don't stress. It's going to be okay.
Basically.
Okay.
Yeah.
But you know, and it's also based on lifestyle, right? So often do people, when they're looking to qualify, are they looking at what their lifestyle is and how much do they break it down per month? Do they go, okay, well, this is what I can afford per month? Or do they look, I'm asking this question because I know the answer. And I find a lot of times my clients go, oh my God, a $500,000 mortgage or whatever. I can't afford that. But then when they go, okay, you know what? It's $2,500 a month. That's how much I'm paying in rent. You know, it makes sense. I'm going to get rental income from this suite. And so actually, it's only $1,500 a month. I also tell my clients, I'm sure Andrew does too, not to maximize your, you don't want to be house poor is the saying, right?
No, it really does depend. And Liz, like you said, educated clients make the best clients. And it really does depend on understanding too their goals. And some people are really, you know, the best thing they can do is to get into the market, tighten their belt, and spend a few years scrimping and saving. If that's their goal, is to own real estate from a young age, perhaps. But it means changing their lifestyle dramatically and understanding what that means for them and for their relationships and for their, you know, Starbucks coffees or whatever it is that they might be used to doing, or travel.
Or brand new vehicles.
Yeah.
I'm with people who, they both have a brand new vehicle with a car payment of $600-700 a month. Well, that really affects your borrowing ability. So, yeah, people make
I have a
decisions.
question.
Right?
So when is the best time for somebody to talk to a mortgage broker?
Now. So I have clients that I've worked with for 5 years before they've purchased. So because I'm a mortgage planner, that's how I position myself, as a mortgage planner with long-term relationships with my clients. So, you know, what are your goals? And sometimes people have no idea. I want to own a house. Well, what does that mean? So what are your short-term goals? What are your long-term goals? And then make a plan. So it's never the wrong time. And then also to start the relationship with their realtor, right? I think of us as a team. So realtor, accountant, mortgage broker.
I'd say everybody's different. I mean, some mortgage brokers probably, you know, just come to me when you're ready, and some mortgage brokers are more around planning. Same with realtors. Certainly Jane and I welcome people to come, even if they're not, if they're young and they're thinking, you know, what do I have to do to put myself into being able to align to being able to buy a home in 3 to 5 years? I'm thinking of selling, but I'm not ready to sell yet. I've been living in my home. I'm near retirement. But, you know, let's come up with a plan, and let's talk about the market, and let's talk about timing. Let's get you looking at what other properties are selling for, so you understand, you know, you may not be looking to sell or buy for 6 months, but if you're watching the market in the meantime, you're going to be educated and you're in communication. So
Perfect.
Is it me, or is the streaming not so steady today?
clear for me. How about you, Liz?
I'm good. It's you, Jane.
I'm
It's the cost of
the
living in
stream
the
has
chosen.
interrupt us.
Yeah.
Okay, so Liz, how do people get in touch with you? what is the best way for them to reach you?
Email liz@mortgagesbyliz.com.
Okay. And what's your cell number, please, for people listening?
250-812-1529.
Yeah. And you can visit her on her website at mortgagesbyliz.com. Andrew, how do people reach you?
They can reach me by email, info@andrewplank.com. Call me 250-360-6106, or check out my website, www.andrewplank.com.
All right. And everybody, if you want to reach me, my name is Jane Johnston. I'm with the Briar Hill Group at RE/MAX Camosun. I have two websites for your viewing pleasure. One is the one that houses these videos at vancouverislandtime.com, or you can reach me at briarhillgroup.com, and my email is briarhillgroup@gmail.com, and by cell phone 250-744-0775. Okay. I want to just thank Liz for coming by today, because this really was last minute. It's based on often what we hear over the weekend and what we're responding to and reacting to. So thank you so much for taking the time today. We really appreciate it.
I really appreciate it. Nice to
Thank
meet
you.
you.
It was fun. It was
Okay.
good.
All right, everybody. We'll see you next week. We're on every Monday morning at 10 a.m. And you can ask us questions during the week if you want us to answer them. If you have any pressing needs or questions about real estate, we're here to serve you. All right. Take care, everybody.
Thanks, everybody. Have a great week.
Bye.
Bye now.
Bye.